Wow, October already. It's time to update you on the latest news about the UK property market. My name is Fabrizio Cravero. I'm a UK property investor and I strongly believe in the potential that UK property investment has. There is so much going on now. That's why I did an in-depth research that I'm going to share with you on what's happening to the UK property market prices, the new homes construction, the economy, and the experts' prediction. I also have a very useful gift for you, so stay until the end of the video, subscribe to the channel and press the notification bell to always stay updated. Now, September was the final month in which buyers could have experienced the benefit from the stamp duty holiday, and Halifax reported that the average house price climbed again in August with a monthly increase of 0.7%, which compared to the previous months is still showing signs of the rate of house price inflation further slowing down to a 5-month low of 7.1%. Given this, the average UK house price is now £262,000, beating the previous record of May when it was £261,000. In comparison to the previous months, August activity was relatively modest, with the cost of property increasing by £1,700 approximately. Russell Galley, managing director at Halifax, commented that compared to June 2020, when the housing market began to reopen from the first lockdown, prices remain more than £23,000 higher. And listen carefully to what I'm going to share now. While the nationwide house price index shows that nominally house prices are 32% above the 2007 peak, the real inflation-adjusted prices remain 10% below the highs of 2007. So the market has been slowing down in every region. However, Wales remained the strongest performing area with annual price inflation of 11.6% and also the only double-digit rise recorded in the UK during August. Similarly, the Southwest is also experiencing strong growth at 9.6%, which reflects the ongoing desire to move to a rural area with more space. In contrast, areas such as Greater London continue to struggle compared to other regions, registering just a 1.3% annual increase to August. The year-on-year rise in London was the weakest seen in 18 months, although properties still remain far above the national average price. Much of the influence of the stamp duty holiday has now left the market, and the drop in the number of transactions compared to a year ago show that clearly. Just to let you understand how active the market has been, look at what Tim Bannister from Rightmove says. Rightmove has reported that a popular tactic has been to sell before buying. In some cases, people have been selling their property and then moving into rented accommodation short-term while they search for a new home to buy. Because of this, the average time for a newly listed property to be market sold subject to contract is the quickest ever at 36 days. Russell Galley from Halifax went on to say those trends look set to persist and the price gains made since the start of the pandemic are unlikely to be reversed once the remaining tax break comes to an end later this month. And now, let's see what's happened in terms of new constructions. August saw an increase in volume for the construction industry. However, the overall pace has eased compared to the figure from the previous month. The activity index now stands at 55.2, down from 58.7 in the previous month. And Martin Beck, the senior economic advisor of the EY Item Club, commented that less stringent isolation rules since mid-August should reduce the scale of the virus-related disruption. Meanwhile, construction firms now have a strong incentive to boost efficiency and productivity. The construction sector remains very healthy. Structural factors such as higher demand for larger out-of-town properties and retail to residential conversion in cities will support new homes building. And one thing must be said while talking about construction. The prices have risen due to the pandemic, and the material most affected by the inflation cost are concrete, fuel, steel and timber. But the commodity market future indicators shows the prices are now at their lowest value since the past 9 months. And according to Martin Beck from the EY, the lowering of infection number and less strict isolation rules signal that because of the promise of strong rebounds in the consumer spending and business investment, the EY Item Club continue to believe that the economy is likely to grow by more than 7% this year. And also the employment side is showing positive signs. The number of job vacancies in the UK has risen above 1 million for the first time in the last 3 months period. Tony Wilson, the director of the Institute for Employment Studies, commented that the biggest risk we are facing is not enough workers rather than not enough jobs. The Office for National Statistics has reported that the unemployment fell to 4.6%. This now means that the number of people unemployed stands at 29 million, returning to the pre-pandemic level. And now, moving to the prediction. First of all, I definitely suggest you to check this video here, which is about the 18 years property cycle, for you to have a clearer view of what to expect for the coming years. And before I share with you a very useful gift that will help you on your investment journey, let me tell you what the experts anticipate for the coming months. Russell Gully, the managing director at Halifax, says the macroeconomic environment is becoming increasingly positive, with job vacancies at record high and consumer confidence returning to pre-pandemic level. Coupled with a supply of properties for sale that look increasingly tight, those factors should continue to support prices in the near term. And in my opinion as well, after studying in depth the reports that I just showed you in this video and the 18 years property cycle, I personally believe that the property prices will keep on rising in the coming months. Probably at a slower pace, but if you are planning to wait for the crash to invest in property, then allow me to give you this suggestion. Don't wait to buy real estate. Buy real estate and wait. Of course, provided that you know what you're doing and you always proceed with a detailed due diligence. So, the fundamentals are here, but where can it be better to invest? It's gift time now, as promised. To help you on your investment journey, I prepared for you 22 free guides with the details of all the major UK cities, analyzing in depth under all the aspects of the property market. It is available for you for free through the link in the description below. Check it out now. I'm here to help you understand how to safely invest in profitable UK properties from the UK and also from overseas. So, subscribe to the channel for regular updates, and as always, invest with knowledge, create financial freedom, and I'll see you next week with another interesting video.